Contract? Isn't that a legal term or a legal document? Yes, that is right. Very simply, a contract is an agreement between two or more parties who agree to be legally bound to meet the terms of that agreement. These terms describe what the parties involved in the contract have agreed to exchange, which is very often a cash payment by one party in exchange for goods or services provided by the other party. Examples of contracts. As a consumer, you frequently enter into agreements that you might not consider or be aware of as contracts. A lease is a contract, whether it's for an apartment, a house, a space for conducting business, or a car. A home mortgage and a car loan also require signing contracts, as do insurance policies on the car or house. Contracts impact all of us every day in one way or another. A contract is an investment, though? That doesn't make sense. Well, it does actually. Using a contract as an investment tool is not a concept unique to equity options. In fact, a number of other common forms of investment are contracts in one way or another. Take bonds, for instance. When you buy one, you're actually lending money to the bond's issuer, who is obligated to repay you the bond's principal amount plus interest. While you might not sign a piece of paper at the time, your payment for the bond in effect establishes a contract between you and the issuer. Unlike many contracts you might enter into, like those with a company, insuring your car or home, an investment contract, like a bond, can hold cash value. It might be sold before its maturity date at a cash amount based primarily on its rate of return. An option's value. Okay, I see. I'd never looked at a bond as a type of contract. I've bought and sold a bond before, and I know that its rate of return determined what I sold it for. But what about an equity option? What is its value based on? An equity option contract's value, it's based largely on the value of a specific security, like a stock or an exchange traded fund, ETF. Let's learn about how that works. Stock versus ETF. An equity option's underlying security may be shares of either stock or an exchange-traded fund, ETF. For simplicity's sake, however, we will always refer to the underlying as stock. Equity options versus common stock. If the value of an equity option is based on the value of a stock, is investing in an option just like investing in shares of stock? Yes and no. Listed options do share many similarities with common stocks. So stocks are securities listed for public trading on the exchanges. Options are also securities, but are listed for trading on option exchanges. Orders to buy and sell options are handled through brokers in a similar fashion as orders to buy and sell stocks. Like stocks, options trade with buyers making bids and sellers making offers. Option investors, like stock investors, have the ability to follow price movements, trading volume, and other pertinent information day by day or even minute by minute. The buyer or seller of an option can quickly learn the price at which his order has been executed. Despite these similarities, however, there are some important differences between options and common stocks, which should be noted. Unlike common stock, an option has a limited life. Common stock can be held indefinitely in the hope that its value may increase, while every option has an expiration date. While stock ownership provides the holder with a share of the company, certain voting rights, and rights to dividends, if any, option owners participate only in the potential benefit of a stock's price movement by the aggressiveness of the option buyers and sellers worldwide. Option price versus stock price. Consider the point made numerous times in the text of this course. An equity option contract's value is based largely on the value of a specific security like a stock or an exchange-traded fund. While the underlying stock price is perhaps the most important influence on an equity call or put option's value, there are other factors that may also affect its value. At any given moment, however, an option's value, like that of any asset traded on an exchange, is set by supply and demand, or the value placed on that option at any given time by its buyers and sellers worldwide. Equity options as contracts. Why you might consider using equity options. In terms of investing, why would I even consider options instead of stock? We like to say options give you options. You're not just limited to buying stock, selling stock, short, or staying out of the market. With options, you can tailor your position to your own financial situation and your own outlook on a particular stock or the market in general. Click on each box below to see how equity options may be used. Option 1. Substitute for stock position. Equity options may be used as a substitute for a stock position. Whether you're bullish or bearish, you can benefit from a stock price's rise or fall without incurring the cost of an outright purchase or short sale of the stock itself. You can prepare to buy stock at a price lower than the current market price. You can position yourself for a big market move, even when you don't know which prices will move. Option 2, used with stock position, or equity options can be used along with a stock position. You can protect stock holdings from a decline in a market price. You can generate income against current stock holdings, supplemental to any dividends paid. Points to remember. An option is a contractual agreement between two parties. The value of an equity option is based on the value of another security, a stock, or an exchange-traded fund. Options are securities that are traded on an exchange. Options have limited lifetimes. They have expiration dates. Equity options do not represent ownership in another security. They represent only the potential benefit of a change in the price of another security. What is an equity option? An equity option is a unique investment tool that requires a solid understanding of the standardized terms that comprise all option contracts. At the end of this lesson, you will be able to define what an equity option contract is and list each of its 6 standardized terms. Identify each piece of information that comprises an option's symbology key.